Michael here with Benno Capital. Thanks for joining me for our September 2025 market update. I'll walk you through the key themes shaping markets and the economy recently, and as always, there will be an important disclosure at the end. As summer winds down, the Federal Reserve remains front and center for financial markets. At last month's Jackson Hole Economic Symposium, Fed Chair Powell signaled that the Fed is preparing to cut interest rates later this month in response to a cooling labor market and signs that inflation is easing. Markets welcome the news, with small cap stocks leading a rally and treasury yields moving lower. Even so, the 10-year treasury yield looks likely to remain range-bound as political pressure mounts on the Fed, while the federal government's interest costs continue to remain elevated. On the inflation front, July's data came in as expected, though the Fed's preferred gauge, the Core Personal Consumption Expenditures, or PCE, ticked up slightly from 2.8% in June to 2.9% in July. This serves as a reminder that the fight against inflation isn't quite finished yet. The delayed effects of tariffs, along with uncertainty around the future, only add to the challenge. At the same time, both the Fed and markets agree that the risk of a recession remains low and corporate America is in solid shape. Second quarter GDP was revised higher to a strong 3.3% annualized pace, giving the economy great momentum heading into the second half of the year. Looking further ahead, new fiscal stimulus expected in 2026 should help offset the impacts of tariffs, providing a supportive backdrop for growth. Because markets tend to look forward, this environment may help stocks hold on to recent gains and cushion portfolios if volatility picks up. As I mentioned last month, corporate earnings remain strong. The Magnificent Seven tech companies posted nearly 30% earnings growth in the second quarter and announced larger capital investment plans. A significant share of that spending is going into artificial intelligence. Industry estimates suggest AI investment could approach $500 billion next year and potentially reach 3 to 4 trillion with a T by 2030. These commitments not only support the earnings outlook for technology, but also could drive meaningful productivity gains across corporate America, where many of these technology companies are headquartered. That said, September has historically been the weakest month for the stock market, with the S&P 500 averaging about a 0.7% decline since 1950. However, when markets enter September with positive momentum, seasonal weakness often proves less impactful. We're also mindful that tariffs could weigh on investor sentiment, especially with some stock valuations out there. When it comes to overall portfolios, the focus should remain on balancing different sources of risk and return. Issues like tariffs, the Federal Reserve policy decisions, and news out of DC will likely make headlines in the months ahead. But the bottom line is, despite the noise, markets hit new all-time highs in August. Strong corporate earnings, steady economic growth, and attractive fixed income yields continue to provide a solid foundation for portfolios, even in the face of uncertainty. As we enter the fall, two items are worth keeping in mind. First, with some of the new legislation, there will be some changes to charitable giving rules starting in 2026. So if you're planning gifts or expect a taxable event, now is a good time to review some of these strategies. And second, again, with interest rates likely heading lower, it's wise to revisit excess cash holdings to ensure your portfolio stays well positioned. At Benno Capital, we're always just a call away. If you're not yet working with us, we'd welcome the opportunity to sit down, hear your story, and explain how we can help you.